Good afternoon and welcome to a special 1-hour program of TheoTrade. My name is Professor Jeff Bierman, CMT. CMT stands for Chartered Market Technician. Just means I've been accorded a designation that I've spent a lot of years and a lot of hard work passing exams to learn the markets from a technical analysis angle. With that preface being said, today's particular discussion is going to be unique. It's momentum of price inertia, the holy grail of momentum trading. Now, I've been looking at computer screens for the better part of probably 28, 29 years. And as I move through the program, I have to get through a little bit of disclaimers for compliance, and we'll get on to today's program. But I just want to let you know you're in really good hands with not just me, but with our TheoTrade team, meaning operations and marketing, as well as our TheoTrade instructors. Now, each one of us specializes in something different. Me particularly, I specialize in technical analysis as well as fundamental analysis. I was a former hedge fund manager, former analyst. Currently, I'm a professor. I teach at Loyola University, Chicago, Illinois. I actually also teach at DePaul University, teach undergrad at both universities, and I teach graduate school at Loyola of Chicago, Illinois. So I just want to let you know, like I said, got a lot of information in my head. But today's program, okay, unlike any I've ever done, is not what I call a piggyback or a copycat. In other words, you could go out, you could read books, you could tap into the internet, you could find information for a lot of different things inside the trading world, okay? Today's, you can't, because it comes off basically the top of my head as an epiphany. I've been watching trading screens for a long time. I've had the better part of 300 or 400 technical analysis indicators in my head, okay? I know them from top to bottom. I've used a lot of them, but I see certain things in situations where I like to help certain traders exploit what I call market mechanics. And this is like one of those particular lessons where I'm trying to reach TheoTrade members, explaining something which is like I said, unique. It's never been discussed in books before, but when you see it, I think it's going to be an eye-popping experience for you. Now, just a little background on myself. Like I said, I got 26 years under my belt in the industry. I was fully licensed for the better part of 24 years. I had 8 trading licenses as a market maker, okay, a supervisor, options principal, futures trader, the whole shebang. But then I decided to jump ship, do my own thing, then partner up with Don here at TheoTrade, who was my former boss at TD Ameritrade. And the two of us together, while we look at the world from a different perspective, okay, we both just take different paths to see a lot of similar things. We're both all about risk management and taking, care of opportunities to profit from market, what we see inefficiencies or missed expectations or probabilities or what have you. Now, again, just to let you know, I am an adjunct professor of finance at Loyola University, Chicago, also DePaul University here in Chicago. Prior to joining TheoTrade, spent 8 years at TD Ameritrade working along Don, so we have a long history between us, cats and dogs living together, but again, we both understand markets, and that's what brings us here. Now, again, just to kind of give you an overview of your TheoTrade instructors, should you decide to join, okay, Don, his expertise, volatility, options, he's the master quant strategist. I actually defer a lot to Don, not just for questions I can't answer, but as a mentor. So he leans on me for things, I lean on him. As a matter of fact, all of us here, collectively, almost literally add up to 150, 160 years of market trading experience. We have no agenda. We're not getting you to buy. We're not getting you to sell. We're just getting you to help you kind of get on your way to managing your own personal money through basically trading. Doc, his specialty, stocks, options, and technicals. Doc is phenomenal when it comes to explaining things like fractals and energy, because Doc was a former engineer. Corey himself, he's a CMT as well. So we're on par with that same designation. Corey is a senior strategist. He's phenomenal at recognizing swing trading and changes in trends faster than anybody I've ever seen. Okay, he picked up on it this morning. My jaw dropped and the market dropped, and I was like, whew, thanks to Corey, I kind of rotated my positions and actually had one of the better days I've had in a while. So kudos to Corey. Slim, okay, he's kind of the grandfather, the senior of the bunch. You'd hate to hear me say that, but he's got 43 years a veteran stock trading, options, and futures trader's experience. Slim is mainly into cycle waves analysis. I've never heard a better presenter in my life on it because I've studied it for over 25 years, and I'm good at it, but I'm not like him. I'm like his protege. Then there's Tony Rago. Tony Rago's got his own sort of embedded system. He only specializes in one particular product, and nobody does it better than him, and that's the NASDAQ futures, this /NQ. He's all about intraday trading, about scalping, okay, identifying risk, getting in the trade, getting out of the trade, and not getting your head locked off. Like today was one of those kind of unusually, what you thought was a volatile day wasn't actually volatile at all. It was volatile by magnitude, but it was a pure momentum day. Speaking of momentum, that's what today's topic is all about. Now, there's different types of trading. There's swing trading, okay? There's what's known as momentum trading. There's scalping. There's intraday trading. There's arbitrage. There's market neutral trading. There's pairs trading. There's a plethora of combinations of different types of trading. So I want to clarify from the beginning. This is all about how during certain days or during certain periods over extended days in the market, why is it that markets just kind of grind and consolidate? Then all of a sudden, like bam, there's an explosive move, either by a rumor, either by a binary event like the Fed raising rates or cutting rates, or somebody says something overseas, or just a crush of order flow comes in because money has to be worked at a given time during a period, during the month or the quarter, and off it runs the stock either up or down away from you, and you stand there staring at it going, well, how did that happen? I am here to answer, quote unquote, that blind spot, that black hole that people don't seem to be able to wrap their arms around. So here's the learning objectives from today's particular program. Number one, I want you to ascertain what the mechanics of momentum trading are all about. We're only going to talk about momentum trading and nothing else. So if you're a contrarian, swing trader, this isn't that particular topic. Although, I will tell you before this day is out, okay, joining TheoTrade will give you access to more than you can bargain for when you realize that everybody who works at TheoTrade covers just about every type of trading you can imagine, and I've covered and have hundreds of different webinars on literally every type of trading, whether it's futures, commodities, intraday, weekly, monthly, what have you. Next, I want you to understand how inertia can create a price leverage trading opportunity. The key operative word is inertia. Now, the word inertia comes actually from Newton's law of physics, from Isaac Newton. So if you're a physicist out there, if you're an engineer, you're probably going to grasp this pretty quickly. But if you don't, it doesn't matter, because the way I explain things, okay, it cuts across all kind of different knowledge of whatever particular skill set you had or education. It doesn't make a difference to me where you come from or what you do. The way I explain things is to transcend all of that, technical and scientific kind of repertoire to get you to understand intelligibly exactly what the concept is. The concept is inertia, but I will walk you through it. Next, I want you to identify what's called the moment of price inertia. That's the key critical pivotal moment when all of a sudden momentum kicks in and you got to get on board before it runs away from you. And how do we do that? Well, we do it through the application of momentum-based technical indicators. So in order to identify that critical point of the momentum push, and there was one today. You saw it this morning going up, but then you saw it later in the afternoon going down. How does this happen? I'm going to walk you through that, but I'm going to walk you through it not just by what I call empirical, like by eyesight, or by just sitting here trying to explain it in sort of an ad hoc way. No, I'm going to show you that there's a scientific application of technical indicators that are actually supported by our preferred trading platform provider that allows you to identify this within a split second. You should already have it up, and you'll see it when I show you in the examples. Number four, after today, I want you to decide on an appropriate time frame that's consistent with your comfort zone and profit objective. Listen, it's not a one-size-fits-all, people. I don't come here telling you, okay, it has to be done this way. There's a million combinations of doing things. 1 minute candle, 5 minute candle, daily candle, Renko bars, momentum bars, tick charts. There's different kind of chart types and different settings and times that any one of you can apply. What it all comes down to, what is it that it fits your style, your comfort zone? If you're sitting and trading with your finger on the trigger and shaking all the time, something's wrong. There must be something out there that allows you to get inside what I call your comfort zone. You feel the aplomb, the calm, you got the mindset. Nothing rattles you, whether you're making or losing money, just does not affect you because you have the right time, you have the right chart style, and you have the right trading strategy at that moment in time. And equally important, okay, is also the underlying you're trading. So even if you have the perfect setup for yourself, you may get a little rattled at times because what you're trading is inconsistent with the constitution of what you basically, what I call your nervous system, okay? People want to trade Amazon. It's all over the place. I don't trade Amazon ever. I don't want to be subject to that nerve-wracking, white-knuckling day. Me, I trade small, really, $20, $30 stocks. Don't move that much, but it allows me to keep my emotions in check. So part of momentum trading can be found in wild stocks, 3-digit stocks, 4-digit stocks, but they can also be found in stocks at $13 or $14. So it runs across the gamut. Number 5, okay? I want you after today to learn how to configure trade and entry points, trade entry and exit points, but they're predicated on the momentum-based technical indicators. Nothing you ever do should ever be done on a holistic basis. Never tell me I feel. We don't feel here at TheoTrade. We think, we see, we react, we process, okay? The idea here is I have a gut feeling. Gut doesn't cut it, okay? Gut feeling works in Las Vegas at the poker table. It doesn't work here. You must be disciplined. You must be scientific. You must be very precise, and you must understand how the markets work from an apparatus standpoint. Finally, okay, and this may be the most important one, even though it's at number 6, okay, you need to exercise patience, aside from your skill to trade, when it comes to exploiting the moment of price inertia. In other words, the opportunity to make money intraday, daily, or weekly doesn't always pop up there. It's not up there every second, every hour, every day. Sometimes it takes time to wait until the actual situation sets itself up so you can exploit it. So when you're doing momentum trading, most people who do momentum trading have no patience. They have to get in, they have to get out, FOMO, fear of missing out. That's not what we're trying to preach here. You need to be calm. The trade runs away, let it go. There's always 20,000 other trades at any time to trade. You don't have to worry about the one that got away. It will always come back to you. There's a bust around every corner in this business, as we always say. So let me define inertia from the beginning, okay? Because this program is going to go for about another half hour to 35 minutes, and then I've got something else in store for you. First off, you ever heard of the word inertia? Because a lot of us have. In the scientific realm, the way it's defined is, it's the resistance of any physical object to any change in its state of motion. And this includes changes to its speed, direction, or state of rest. Most people associate momentum trading with speed and direction. That's true. But before that speed and direction, okay, starts to kick into momentum, it usually occurs from some type of state of rest or stasis, believe it or not. So it's the tendency of objects to keep moving in a straight line at a constant velocity. Now, I'm going to translate this to you when it comes to price action. Like, this is the physics definition, but in order to understand the price-related definition, you need to grasp this first. So let's move on. So what is the moment of inertia? How do you define that? And believe you me, I'll walk you through a lot of different looks of price charts so you can clearly see what it means by moment of price inertia. Well, the moment of inertia, otherwise known as the rotational mass or rotational inertia of a rigid body, determines the torque needed for a desired angular acceleration about a rotational axis. Now, a lot of that sounds very handed, very technical, very physics-oriented. Oh my God, I must need to be an engineer to understand. No, you don't. Let me simplify this for you, okay? You ever hear force equals mass times acceleration? All this is saying to you is that when an object moves in a constant motion, what's Newton's law of physics number 2? An object in motion stays in motion. But the third law is what? An object in motion no longer stays in motion if an opposing force acts against it. In this case, it's not an opposing force that's acting against the price. It's not an opposing force. It's a force that's acting with the price, not against the price, and it's doing at a certain rotational axis that you're actually gaining speed and momentum once the mass and the force hits you. So watch what happens when I bring up the third particular slide. This is where it all comes together. This is the holy grail of momentum investing or momentum trading. If you grasp this, okay, it's an epiphany, okay? It's like a life-changing experience once I show you what this looks like. I've been doing this 28 years. I've seen this happen, and once you hit that sweet spot, you're going to realize, oh my God, if all I am is patient and get the timing down right with a bunch of indicators, I increase the probabilities dramatically of making a lot of money in a short window. And I'll show you. The moment of price inertia as it relates to price action, now we're talking about stocks, we're talking about futures or commodity prices. As it relates to price action, it's the point where the price is optimally and most efficiently positioned to be leveraged into a quick, constant, and forceful rotational movement. So the torque needed to generate leverage is, how you define it? It's what is the actual catalyst that makes this happen? It's order flow. But it's the massive order flow that's generated by market participants, whether they be human or automated. Now, one of the complaints I hear from people all the time is, well, how do I know which part is human and which part is, algorithmic trading and the computer's firing off orders? Here's my answer back to you. Who cares? You don't care. It doesn't matter whether it's a human or computer, okay? You just need to get on the trade and get on the right side of the trade, catch the leverage on the move and ride it, and then get off based upon what? Exit the trade based upon your technical indicators. And I will show you my particular preference of the two that I use in my trading day in and day out. I've been doing this for, like I said, been using these for 28 years, okay? Don't get caught up in all of this. Like, this is momenta of inertia theorem. This comes directly out of a physics book. And you're looking at this going, oh my God, this is like hieroglyphics. Like, what am I going to take from this? Okay, forget all about this down here. All you need to see is these two kind of graphics. This is linear motion. Linear motion means what? Okay, it's not curving. It's moving in a straight line. You ever heard the expression, the shortest distance between 2 points is a straight line? All this is telling you is that, like, price action is X. So when the price is trading sideways and chopping about a certain, like, resistance or support level or inside a channel, all it's doing is it's building inertia. In other words, it's Brownian motion. The price is always moving, but it isn't always running away to the upside or running away to the downside. That's because there's no what's called rotational axis force of mass applied against it. What is the rotational force of mass applied against it inside the stock market? That's you. That's me. That's institutions. That's algorithms. That's prop traders. These are people buying and selling securities. It's the point at which everybody comes together at a critical point at the same time, and literally we hit the perfect time, the optimal efficiency, when the price is already moving in a certain sideways or chopped direction. Then we catch the rotational axis and run it straight through the roof or straight down. Yesterday, the E-mini futures ran up 62 points, 35 of which took less than 10 minutes at the end of the day. Today, you get the reverse. The market's down about 25, 30 points, and then all of a sudden, 20 minutes later, the market's down 30 points. How the heck does that happen? Momentum trading. It's the momentum of inertia. You're underestimating inertia and the momentum rotational force that's applied by the thousands of people and the millions of orders being fired in that's making this happen. It's all one-sided. That's the point. So the idea here is in the angular motion graphic, that's the radius out to the circle. The idea here is you could have price moving and chopping sideways, but once the mass comes against it, it can change it. Like when the mass is applied and it starts to move down here, the mass can push it back up inside that channel, or the mass could be coming from this side, the torque, and blow it outside the channel. The market momentum, okay, is not like contrarian trading. It's not like trend trading. It's literally like, looking at Indiana Jones in the Temple of Doom in the opening scene, and you see that like 10,000-pound boulder coming down at him. He's just running to get out of the way of that. That's what momentum trading is like. If you're on the wrong side, you feel like you're getting run over by a boulder. If you're on the right side, you're just riding the bull, so you're just on top of it, enjoying the ride up or down. So let me take you to the next slide and show you something, okay? In the momentum of inertia graphical representation, assume this is a price of a stock moving from point A to B. It's going from, let's say, 35 bucks a share, 35.10, 35.10, 35.30, and it's going back and forth. If a force is applied from the angle and there's enough mass against it, okay, it can extend the move. So in most cases, let's say a stock moves from, let's say, and let's say this is moving downward and it's a selling program, and this stock goes from 35 to 34.70, you're like, hey, that's only 30 cents. But if the rotational force can turn on its axis, and this is steadily has inertia, meaning it's a constant velocity, if it's constantly moving in the same direction with price, well, then if you increase the order flow in that same direction, and there's no force applied against it, you tell me what's going to happen. It's just going to keep pushing the boulder down the hill. That's exactly what happens in the stock market and momentum investing. When the market started floating downward on the E-mini, and let's say down here at this point, like right here, let's say this is a 20-point drop, all it took was some more rotational axis movement, meaning order flow, just tons of order flow. And you can see it in the volume histograms, okay? You could see it inside of an equivolume chart. You could see order flow just picking up because it's provided on the trading platforms. If order flow is picking up and it's going in the same direction, it's like the expression, a rolling stone gathers no moss. It's just the moment of inertia where the angular mass comes in and exacerbates the selling. So if it's only supposed to fall 25 or 30 points just on a normal constant velocity, when you apply more mass, which is more order flow, it just pressurizes it and makes the inertia increase its speed, increase its direction in the same constant direction. There's no movement in either way. There was no volatility in either direction in today's sell-off. There just couldn't be because there wasn't enough what's called resistance applied against it by buyers to stop it from falling down. That is the holy grail of momentum trading. The ability to recognize the moment of price inertia when the actual mass is going to accelerate against you, the force itself, that drives the price action and runs over the short sellers or runs over the people trying to catch a falling piano. It happens intraday, it happens daily, it happens weekly. That's one of the reasons why the market went to an all-time high. People just don't understand how momentum and inertia work together. So let me take you down here. There's two different indicators of choice that I like to use personally. Personally, these are the ones I use. I use the MACD. Now, on the thinkorswim platform, there is more than enough. There's probably 30 or 40 momentum indicators. I use the MACD. What is the MACD? It stands for moving average convergence divergence. It's just using moving averages, okay? It takes two trend following indicators. It converts it into a momentum oscillator by subtracting the longer moving average from the shorter moving average. So as a result, the MACD offers the best of both worlds. It captures trend and momentum in the same indicator. So it kills two birds with one stone for me. That's one of the reasons why I gravitate towards it every day. You can also use it on any time frame. So whether it's a daily, intraday, hourly, weekly, okay, the MACD will adjust accordingly. Don't sweat it, okay? The MACD line is actually the 12-period exponential moving average less the 20-day. So you're getting a differential, and the closing prices are used for the averages. Now there's a trigger line, a 9-period EMA of these differentials of that MACD line. It's plotted with the indicator to act as what's called a signal line and identify the bends and turns. So the histogram that you're going to see in the example represents the difference between the MACD and its 9-day moving average, the simple line, the signal line. In essence, the histogram is your momentum graphic, and it's so easy to recognize. You can tell when you're in trouble and when you're not in trouble. Now, to complete this, part of the back part of the MACD, and I'll show you in the example, the histogram is positive when the MACD line's above the signal line. That means it's bullish, but it's negative when the MACD line is below the signal line. So you're going to have two lines intersecting, converging and diverging. One leads, one lags, and the actual histogram is going to actually indicate to you in graphical format whether momentum is increasing to the upside or downside. If it's increasing to the upside, why the hell are you selling? If it's increasing to the downside, why are you buying? You should be shorting or selling instead, because it means that the inertia, okay, is working against you and that the acceleration is just beginning to start. So the pain is going to get worse for the longs and it's going to feel more joy for the short sellers, assuming they're on the right side of that trade. And as the name implies, the MACD is all about the convergence and divergence of the two moving averages. They're going to interact constantly. The convergence occurs when the moving averages move toward each other, while the divergence occurs when the moving averages move away from each other. That speaks for itself. So the shorter moving average is the faster, right, for the MACD movements, and the longer moving average is the slower and less reactive to price changes in the underlying security. Again, it sounds like a lot to absorb, But when I show you an action, it will become that, it will resonate, it will clarify, it will cut through. I have one other indicator of preference that I prefer to use. It's also an oscillator, but it's not what's called a two-line trigger oscillator. As a matter of fact, it's not even a trigger for a trade. It just reflects what I call conditions of strength. It's a relative strength index. So here's the thing. On the relative strength index, pardon me, it's classified as a momentum oscillator. So you know right away it's already designed for what? Yeah, it's designed for momentum trading. So's the MACD. They're both designed for momentum. So it's not like you have to fish around and worry, is this trend? Is it contrarian? No, they're momentum indicators. That's what they are. So you know you're in the right wheelhouse. And they're designed to measure the velocity, pardon me, and the magnitude of directional price movements. So contrarians, it's not really for you, okay? Market neutral traders, pairs traders, it's not really for you. This is strictly momentum, okay? What does the RSI do, people ask? Well, it computes the momentum as the ratio of higher closes to higher lows, to higher closes to lower closes. So it's actually gauging gains and losses on a certain look-back period to see whether or not the price action is getting stronger or is the price action getting weaker. If it's getting stronger, why are you shorting it? You should be going long with the momentum. If the price action is getting weaker as reflected in the RSI, you shouldn't be buying it. You should be selling it or shorting it, okay? This captures what's called momentum of strength, while the other one captures momentum of direction. So you're having direction on one side and strength on the other side. So you can put the two against each other to understand how the momentum of inertia can be exploited. Again, the RSI itself is most applied on a 14-period time frame. That's what we're going to use. It's measured on a scale of 0 to 100. So if it's at 70, it means that the momentum may have peaked, but it still means the momentum is very strong. If it falls below 30, it means the momentum to the downside in terms of the selling pressure may have abated, but it doesn't mean that it's bullish, okay? That's strong strength in terms of price action. That's very weak. But once it hits the 30-70 level, it reaches what's called a condition of either overbought, oversold, where it's not a trigger. It's just an alert to tell you that the easy money, so to speak, the bulk of the move has presumably been made. The RSI can be used to identify the general trend, and signals can also be generated if you look for what's called divergences, failure swings, and centerline crossovers. So even if you're not a momentum trader, okay, you can still use the RSI. Okay, it can be used for contrarian traders, but in the context of momentum trading, it becomes valuable because it helps you identify when the momentum runs bone dry. And once the momentum runs bone dry, guess what? Time to get out of the trade. You get on the bus, you get off the bus. You get on the wave. If you're riding it up, you get off the wave like a surfer. You don't sit on these things forever. This is not an investor's trading strategy. It's purely you're in for a burst, you're out for a burst, and that burst might be 2 or 3 days. It might be 2 or 3 hours. It depends on your trading strategy and style. It's not a one-size-fits-all. Now, here's a great example, okay, a prime example of the momentum of price inertia from a daily time frame, okay? Here's American Airlines. I'm looking at it on a 3-month daily chart. I'm using traditional candlesticks, right? Here is the RSI Wilder, or the relative strength index. That's an overbought condition. Over here, it's not overbought. But here's the thing. Here's the MACD. The blue line's your leader line. That's your MACD line. The yellow line, that's your laggard line. That's your signal line. So if the leader line, which is the blue, is below the laggard, it's a sell signal. But if the leader line is above the laggard line, okay, or the signal line, call it, or that's called the MACD line, it's a buy signal, okay? Don't fight these things. You're going to bark up the wrong, you're going to drive yourself insane fighting MACDs. Now, to be honest, MACDs, okay, they don't work very well when there's not good price volatility. The MACD thrives on price volatility. The RSI, okay, price volatility or not, can be used with any type of trading strategy. But when you marry them together, they're a formidable combination. Watch how this momentum of inertia works. This is what I call the holy grail of trading. Now you see American Airlines starting to rally up. So it regained its footing in February off a hard sell-off. Then it starts to pull in here. But all of a sudden you get what's called a hammer candle. A hammer candle traditionally in technical analysis and I'm an expert in candlesticks, okay, I've read more books than you could possibly imagine. When you see a hammer like that, okay, that's a hammer setup, the way it looks, that's a bullish signal. But that's not your only trigger. That's your setup. But what it comes down to for the momentum inertia, that's not the momentum inertia. But it's cluing you into, hey, we might have another leg up. Here's what you see. You see the RSI at the 50 level. At the 50 level, okay, momentum could rip to the upside or momentum could rip to the downside. In other words, what I'm telling you is strength could get stronger from this point on and rip higher, or strength could get weaker and rip lower. Over here, okay, strength can't get that much higher. It's so strong that it just flattens out. Like there's no upside at this point because it's so horrifically overbought. When you're a momentum trader, the sweet spot is when the RSI sits right on the 50. You want it right at the 50 to the 45, right in that zone. Why? So it can jerk itself to the upside, so it can gain inertia and momentum to rip higher. That's why. Look at the MACD. Here's the thing. The MACD itself is in a bullish position. The leader line's above the laggard line. But what you need is, you need the MACD momentum. This is the histogram. So it's capturing the difference between the leader and laggard line. If it's above the zero line, you know it's what? It's bullish momentum. Therefore, you should be playing to the long side. But when do you get in to catch these momentum? It's like, how do you catch a move like this? You actually wait for the momentum to come in but remain positive. But that's the sweet spot. That's your point of leverage. Because once it comes in here and moves sideways in a bullish fashion, what have you got? You have consolidation. How many times has Doc said, and again, Doc is one of my favorite people. He's one of the reasons why I work for TheoTrade. Markets always work from the inside out. They never work from the outside in. So this is the inside out. You get the bullish push, you get the consolidation, you get the bullish hammer, then you get your sweet spot. That's your what's called the momentum of price inertia. That's where the leverage comes into play. Like a fulcrum, you swing it like, and it just swings upward. And you're also trading with the MACD. So now the MACD can do what? It can run up higher. It's above the zero line, which is what you want. You've got the histogram bullish, and you have this popping, pulling back, and starting up again. Look how these things work. It pops, pulls back, and then rushes, right? Drops, pulls up, drops lower. That's a momentum trade. The sweet spot for momentum was actually right there before it's going to break below. Look, right there, it's on the 50 line, and it's just about to break into the down below the zero line. That's your momentum of inertia to the downside, and you would have caught about $6. Your momentum of inertia is set up perfectly. Take a look right here. You've got the momentum, what's called the actual linear inertia going sideways, so you have enough price movement to flatten out. Then the strength is set up to go. Then you get the hammer. Look at the setup here. Bullish, 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 and the stock runs away. That, my friends, is the holy grail of a bullish daily setup. If you shorted this, okay, you clearly don't understand momentum. This is a situation where the stock is not even close to being overbought. So you don't necessarily want to short something like this unless it actually breaks below the zero line, and then this breaks below that 40 line. Then you have a case for going bearish. But that is what I call the point of momentum inertia. Now let's look at a bearish example, okay? This is General Motors. This is a 3-month daily chart. This is actually this month, okay? But I actually took this snapshot, okay, right after February and early March when I was tapped by Dawn to do this program. Now look what's happening here. Notice how the trend is heading downward, okay? Where at this point is the actual RSI? It's right below the 50, right below it. So you know it's weakening. So if the price action's trending lower and the relative strength of that price performance is weakening, you shouldn't be buying it. Don't buy weakness, okay, unless you're a contrarian. If you're a momentum trader, you short into weakness. You don't buy weakness. But the thing is, you can't short here as a momentum trader. Why? Well, you actually can, but your risk reward is amplified here because it can't fall that much farther. You can get it more oversold, but the bulk of the gains aren't made here. The bulk of the gains are made from that 50 fulcrum or the 60 fulcrum, so it can bend its way lower on an angular motion to fall faster. Look at the MACD. It gives a nice, beautiful head fake right there. See how that? Now look at the momentum histogram. See that? That means the delta, or the difference between these two lines, is starting to catch momentum. You shouldn't be buying this. You should be shorting this like crazy. Why? Price action's going lower. You have an extraordinarily bearish candle because it undercut these 5 candles. In one day, you lost 5 days worth. That's bearish. Then the momentum, the strength is weakening. Then you have a breakdown in the MACD below the 0 line. Bearish, 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 and the momentum inertia picks up and slams this stock from 41 to 36, and that only took 3 days. So what took this stock 6 weeks to make up, lost it in 3 to 4 days. That, ladies and gentlemen, is what's known as momentum trading. That's the whole point. If you want to become a good momentum trader and really sharp, you have to pick the sweet spot. That's the sweet spot. That's the sweet spot. Usually, that's not going to give you a sweet spot. It's just going to give you a candle signal of bullish or bearish. But you have to line these up together to identify that moment of price inertia where the actual momentum can accelerate. It starts from a standing point. In other words, the price inertia means the price action's trading sideways. So this is inertia. Look, it's a steady price action sideways, then the breakdown. Steady price action sideways, then the breakdown. Markets don't usually move up in a straight line. They usually stair step. This is stair stepping lower, and you can exploit it with the momentum of price inertia. Let me give you another one. For those of you who are like, hey, Professor Bierman, I am not a position trader. I'm exclusively an intraday trader. That's okay. It doesn't matter. You can use the MACD and RSI on any timetable. It makes no difference. 5-minute candle, hourly candle, momentum bars, tick charts, okay, whatever style you want. These, okay, will accommodate you. But I want to stay consistent. Take a look at what you have here. It's a classic example of traders who short, who get their head lopped off. Look at this stock. It has a push up here. So there's your initial momentum. Now, this is negative momentum. So you shouldn't have been buying this. You shouldn't. If you were going to buy, you should have bought here, right? But the fact of the matter is you can't buy there for this. Why? Because two reasons. Number one, the RSI is too low. You needed to get it closer to the 50 so it can get that leverage, that point of momentum leverage to make the push with the order flow. But at the same time, it's below the 0 line on the MACD. So this is a terrible setup to buy here. What you need to do is you need to get the MACD and the histogram above the 0 line. Take a look right here. That's your sweet spot. Look at that right there. There's your leverage. You're starting to get momentum. You're starting to get the leader line break free of the laggard. So there's your buy signal right there. Then you have the moment of price inertia triggered because you're right on that 45 to 50 level. Then it explodes higher. And at the same time, you have a breakaway gap on Cisco that, guess what? It takes out that 44.5, that 44.5 resistance. My God, what are you doing shorting this? You shouldn't be shorting this. You should be riding this way up there as far as you can. Now that is overbought. At that point, you should exit the trade. So your entry should be right off the trigger here. That's your entry. Your exit should be when the RSI tags the 70 or higher or the MACD histogram peaks. See how that peaks right there? Like you should be taking off the trade right when the MACD histogram flattens out. So you have 2 or 3 exit strategies. Your entry strategy keys off the RSI and the MACD in sync with a breakout. Buy, buy, buy. There's your trigger to buy intraday. But your trigger to sell is what? Either the candlestick turns red or the RSI hits 70 or the MACD, okay, starts to flatten out and roll over. Any one of the 3 will do. Or you could come up with a combination in a weighted average model created by yourself. Okay, I'm just giving you ideas. There's no perfect quote-unquote exit strategy. There's no perfect entry strategy per se, but you got to line these up and what I call synchronize these as close as possible. Look at the leverage. It's just breaking out. So it's getting what's called the price momentum leverage right there. That's why it ripped. It ripped because you know what? The algorithms saw the RSI gaining strength. It sees the breakout in the MACD, and it sees the order flow coming in. What do you think the boxes are going to do? The high-frequency algo boxes are going to buy this thing like crazy and force all the other institutional traders to have to fire off order flow to catch it, okay? You don't short things like this. You buy things like this and then get off the bus when this hits 70 or when that turns red or when this flattens out and starts to curl and turn back over. Any one of the 3 will do. Let me give you a quick bearish example because, again, at TheoTrade, there's never an agenda. We're not these unidirectional professors or teachers, okay? Most mutual funds, they're long only. How is that going to help me when the market's blowing up? Like on a day like today, what are you going to tell your client? Close your eyes and pray? That's not a strategy, okay? Traders have to be able to play both sides of the market. So when I design all of my teaching lessons, and there are hundreds in the archives, they always give equal argument balance to both bullish, bearish, and also neutral. I have no agenda. It's strictly let's make money in the most efficient way with the proper risk-reward element in place. One of the things you learn about the moment of price inertia is it's not just a trigger to buy. It's also the right risk-reward situation. Look at what happens here. Okay, here's U.S. Steel, okay, this month and last month. So right now, U.S. Steel breaks down to the upside, but all of a sudden, news comes out. This is a news-driven bar because Donald Trump makes a statement about tariffs. So all the, what I call the naive people, they chase it upward. Why naive? Look at the MACD. You're buying the candle, but you're disrespecting the MACD. This is already building momentum to the downside. Why are you fighting this? Then you come in and the momentum of price inertia, even when this candle breaks to the upside, look at the candle. Look at how it breaks. It opens up higher up here and immediately starts to sell down. So it opens up higher, fooling the crowd. But the professionals who look at this say, if the candle goes higher, what should happen? Well, shouldn't the MACD go higher? Shouldn't the RSI Wilder, the RSI index, shouldn't that move up with it? They should all, if this candle is legitimately bullish, then these momentum indicators should also register a bullish signal. Instead, as this goes up, this is getting weaker. As this goes up, this is getting weaker. That's known as what's called a bearish divergence. The people who bought this got suckered. Why? Because they trusted the price chart and traded without any trusty momentum indicator. Okay? The short sellers feasted and made a killing. Look at the momentum reversal on this. Look at the sweet spot. This was already in a 45 to 47 range, so it was already setting up to go lower. The trend was setting up to go lower. The MACD was setting up to go lower. Look at the momentum. The momentum is already bearish to the downside. This is selling pressure. Why are you buying against selling pressure? The only reason why you would be buying here is to cover a short position if these histogram bars flatten out, which would indicate some type of reversal. There's no reversal here. This isn't gaining weak. This is gaining strength to the downside. It's weakening as the price action is going up. It's a classic intraday reversal that completely slammed, and I mean slammed, okay, a lot of contrarian traders and even some momentum traders because they trusted the price action. Don't necessarily trust the price action. Trust the momentum indicators. They're going to keep you on the right side of the trade. All day today, when I saw the market weakening, I had 2 long positions. I just kept listening to Corey, okay, and Don, and just kept adding to my short positions. I recognized the momentum was going down. I wasn't going to fight this on my long positions. I wasn't going to add to my long positions. But when I caught the momentum of inertia on a couple of short trades, I just added to the positions, and those positions neutralized all my losses. So I came in this morning with a big gain, and as the market's falling further, by the end of the day, I maintained my large gain because I offset intraday with short positions because I caught the momentum of inertia points intraday on these short positions. I didn't fight the tape. I didn't trust what I was seeing by the price action. I trusted my momentum indicators instead. So that, my friends, is what the holy grail of momentum trading is. It's the ability to line these up. Candles, okay, a 50-45, 55 split, which is what I call the sweet spot or the momentum of price inertia, and then the point of leverage where you can actually turn and make the thing, you know, either bleed lower or just elevate it and shoot it higher. Take a look at these histogram bars and recognize that is what's known as momentum. The inertia is just the price action flattening out, so it's a steady, steady price action so that you can leverage it and run it or leverage it and blow it down. Momentum starts from what's called an inertia standpoint. It doesn't start from like a state of rest mostly. It's an even state of like a consolidation phase or a channel, then it breaks to the downside, or it's channel and then breaks to the upside. This is a nice intraday look at what I call the holy grail investing, momentum trading. Now here's the thing. These are my final thoughts on what you've seen today. Keep this in mind. These are what I call caveats. They're not disclaimers. There are caveats. Because if you want to implement this system, you want to adapt it, you want to integrate it, parts of it into your trading, either by adding the indicator or adding the strategy, okay? Think about this for a moment. Identifying the moment of price inertia can be best achieved through the application of technical momentum-based indicators. Translation, don't do it by sight. Don't be foolish. Okay, you must apply momentum indicators. Otherwise, you'll not be able to kind of catch what I call that sweet spot or the turning point or the point of leverage where the momentum starts to kick in, and all of a sudden you're like at that turning point where the momentum has just started and you're catching the beginning of the momentum, not the end of it. Number two, keep things simple. Everything should be done simple. It's not necessary to apply a confluence of momentum indicators to identify the moment of price inertia, okay? One or two indicators typically suffices. Me, if you look at my trading screen, I basically have 3 indicators. Never more than 3, never less than 2. People are like, you must have up 30. No, I have 3. Everything is clean, simple, and efficient and systematic. Number 3, keep in mind that the momentum of price inertia, it varies from indicator to indicator in conjunction with the time frame applied. So if you decide to choose not to use the MACD or RSI and something different, great, go for it. But understand that the actual price of momentum inertia may be triggered at a different candle or at a different price because the indicators are formulaically designed differently. They're not all consistently designed the same. So different indicators are going to yield different triggers and different results. Remember that the momentum of price inertia also varies with the innate volatility of the underlying security. Trust me, the momentum of General Electric at $13 a share ain't nothing like Amazon at $1,500 a share, okay? It's not the price of the stock, it's the underlying characteristics. Some stocks have less number of shares, they have higher market maker moves, they got higher implied volatility, they got higher average true ranges, they got higher momentum, okay? It varies from underlying to underlying, so don't expect a one-size-fits-all. Get comfortable with the underlying security. That's the important thing. I never trade Amazon. I never trade Google. Not even options. It's not my style. The momentum is too fast for me. I have to slow things down even when I'm my momentum trade. Okay? Now let me go over this and let me show you something really cool here. Okay? First, what we've just looked at. And that includes me because I'm educating myself at the same time I'm educating you. Okay? The momentum of price inertia as it relates to momentum trading and how to seize the trading opportunities from it. That's what you've just seen. So congratulations. You've just gone through a type of technical analysis with me that has helped many traders use a law of nature to their advantage and profit. Now remember, there are many other phenomenal technical analysis tools that you can use that can save you time, frustration, and money. Also, there are some amazing fundamental analysis tools that you can use to take it up a notch even better if you know where to find them, I should say. So again, I'm going to qualify that. Now remember, I teach technical analysis and I also teach fundamental analysis, and I often blend them in my discussions. So if you want answers, I'm going to give you a great amount of answers that you're probably not going to find in one book. Either the book is all fundamental or it's all technical, but never the two shall meet in between. I'm unusual because I know how to blend the two of them and make it intelligible, fun, and stimulating at the same time. Would you like to know more about these tools, what these tools are, and how to properly use them in your trading arsenal? Well, guess what? You're in luck. At TheoTrade, this is what we specialize in. And in particular, it's exactly what I've been teaching others for over 15 years. Now, it may seem overwhelming at first, but if I and thousands of my students can learn this stuff, listen, so can you. I know exactly what you need to know to start benefiting in your trading right away. So I know I've got a crowd out there and it's pretty large. I can see it. Great. Now follow along this list with me, okay? This is hard to believe and hard to absorb at times. People's jaw drops when they see this, okay? But I have a 15-class bundle. It's called the Professor's Package. They call me the Professor at TheoTrade because there's actually 2 Jeffs. It's easier to call him Jeff and me the Professor because now we know how to separate the 2 of us. Look, I'm your trade instructor. I got 15 full courses for you on fundamental analysis, technical analysis, trend, momentum, and so many more available immediately with unlimited access here at TheoTrade. I got a class slide deck for each class available immediately for download. Believe you me, there's 15 classes. You know the actual slide deck you just saw for the last 30? I got 15 of them, some longer, some shorter, that you can just pull up at any time and go through to see how all this kind of comes together to make you a more efficient trader. Plus, you get 1 month access, the access pass to TheoTrade. What does that include? Well, it includes daily coaching sessions with timely topics on stocks, options, and futures. Ladies and gentlemen, TheoTrade opens up at 8:30 a.m. Central Standard Time. Okay, it goes all day, literally till 4 o'clock. Like almost every hour of the day, not every day, but most days, okay, you have a new instructor coming on once an hour or once every 2 hours. So it fills up your day. Nobody who works for TheoTrade, we never watch TV. We watch each other. We learn from each other, we share from each other, and we share with you. Now, you also get access to the live trading chat room. It's fantastic. You can communicate with other traders as well as communicate with the instructors. You can pose questions. We'll answer them live on air, or you can send us emails. You have access to all of our expertise and knowledge. That includes not just my archive, because my archive runs hundreds deep. You got Doc, okay, you got Slim, you got Corey, you got Don. We got a deep bench of instructors, and we got the deepest set of archives you've ever seen on one trading platform. And it all comes together. Literally, it's like combining 100 textbooks into just one trading platform, and I kid you not. So you start here at the section. There's 22 videos, so you'll click on that. All of our TheoTrade shared charts, you get those, okay? I make a lot of scans, okay? I create a lot of setups for charts. Guess what? We copy them like a facsimile, and we share them with you. Also, you have access to all the studies and so many more indicators and combinations of indicators. By the way, the course, it qualifies you for a reduced commissions rate. So again, we work with a preferred broker. And if you want to learn more about the rates and whatnot, don't ask me. You got to call the thinkorswim staff. They're phenomenal. Jeff, Stacy, Don, they'll walk you through the whole program. But again, our preferred broker is fantastic. The trading package is great. The service is great. The executions are incredible. I don't go anywhere. I trade on the same platform for 20 years. Okay, all of this, believe it or not, what I talked about on this page, okay, comes down to $199. I'm telling you, it's a steal, okay? What do you get in my 15 class bundle? Like, people are wondering, what's inside the bundle 15 classes? Check this out, okay? Where in the world are you going to find all this information on one particular website? Trust me, you won't. It's spread among hundreds of books, which I've put together into one simple way of pulling it up whenever you want to. Technical Analysis 101, a comprehensive guide to becoming a better trader class, okay? Then we got what I call the upgrade. Once you graduate from this, you move on to this, Technical Analysis 201. It's from chart setups to trading execution methodology class. It's fantastic, okay? Then also, I have the art and science of trend trading. So even if you're not a momentum trader, who cares? You can still, be a trend trader. Come to TheoTrade. I have an entire class, a 3-hour program dedicated to just trend trading. Not to mention, it's on my archives. I have hundreds of trend trading, 20, 30, 40, 50 trend trading, different classes that are archived. What? You're a contrarian trader? Guess what? I did a contrarian trading class. All this comes from TheoTrade. All this comes from the top of my head and all the experience of 28 years, okay, put down into one platform. What else do you get? You get fundamentals. So you think we're like one-dimensional here? You'd be wrong. We give props to everything. We pay respect to technicals, options, futures, commodities. We also pay attention to psychology, people. Like, if you need help, controlling your emotions, you feel like you need a hand-holding psychologist. In a way, okay, Doc's our resident, psychologist. He's phenomenal with Mindset Monday. But you get your fundamentals, a comprehensive guide to macroeconomic, industry, and financial statement analysis, okay? For those of you who are interested in Ichimoku, which is a sophisticated sort of forward-looking indicator, okay, I got a lot of positive feedback. There's an Ichimoku trading class you have access to in the bundle. Technical trading. If you guys are like, I don't like to trade myself, I would prefer to set up a trading system through an algorithm. Guess what? I have one built just for systems design and testing your systems. Okay, we do it all here, people. It's remarkable what we provide. Also, if you're a person who's like, okay, technicals are too much for me, fundamentals I'm not interested in, all I care about is candlesticks, great. I have a class just on pattern recognition and an introduction to Japanese candlesticks charting class. Okay, so the more you think that we can't provide, the more we do provide. Look what else you get. a comprehensive guide to intraday trading strategies and setups class. So if you're a person who's like, I don't do any position trading, I don't do any long-term holds, everything I do is a quick burst of intraday trading, great. I have one just for you, just intraday trading strategies and setups only. You know what? For those of you who are like, hey, I'm into Fibonacci's, got a Fibonacci for you. That's old school, but there's still a collection of people who love Fibonacci's. Then there's a comprehensive guide to evaluating market strength, okay? If you've never seen sector rotations, how to negotiate markets when they're running and weakening, okay, this is built just for a day like today. Then there's a bonus. Come this Thursday, that's right, 2 days from now, I'm hosting a 3-hour special webinar on oscillators. It's called Everything You Want to Know About Oscillators But Never Thought to Ask class, okay? This is going to open up the playbook so wide that if you don't like your trading system, you're going to find something inside my oscillators where you're going to flip, you're going to replace one for another, or you're going to get rid of one altogether, or you're going to adopt a new one and start adding these different technical tools to your war chest to make you a better trader, to help you time your trades better, and to help you manage risk better. Can't make any promises except that you're going to have your world expanded, and you're going to find yourself off in a better place before, after seeing this than versus before. So all of this comes straight to you from TheoTrade. I'm glad you joined me for the hour. I've got about a minute up. If there's any questions, let me know. But I have one more thing to press here because I think I'm going to run into questions. Look, this is what I've learned my whole life from my family, okay, from my mentors, okay. The best people to sell you isn't really yourself. It's other people who know what you're capable of. Because you know what? They'll provide the objective opinion, okay, whereas sometimes I might embellish the things that I know. This is just from one particular, a TheoTrade member who's been with us for a while, okay? Says, hey, Professor Bierman, just wanted to reach out after watching pattern recognition, a fundamental in class. So he was into the Japanese candlestick charting technique, absolutely blown away by the material and can honestly say we'll never be able to look at a chart the same again. Thanks for putting together this class. That's one of our clients, okay? We have an entire testimonial wall that runs pages deep. By the way, the web address, as you know, to communicate with us, okay, it's support, SUPPORT, at TheoTrade.com. Simple to remember. Everything's at TheoTrade.com, but if you want to explore the site, just type in www.theotrade.com. It's one of the easiest sites ever to navigate, okay, to find what you're looking for. There's a search button, there's contacts, there's feedback, there's chats. It's a lot embedded on there, okay? This is from Mike. Says, hey, Professor Jeff, the diversity of information and quality of information TheoTrade provides, it's really rare. In a good way, though. Sometimes overwhelming to digest it all. I wanted to offer some positive feedback. Will I have to triage the information coming at me, like his choice of words, meaning consider how relevant each coaching session is to my particular style and objectives. I found the risk-centric indicators sessions to be especially valuable. No reply necessary. I know you're busy, blah, blah, blah. Listen. I have put together hundreds of different, everyone is unique, okay? I never overlap, I never repeat myself, they're all different, okay? So that's why a lot of people come back over and over again, because at some point you're going to find something that resonates or appeals to you, okay? By the way, on the TheoTrade 1-month access pass, you get the 15 class bundle, which is the professor's package, which you can call for, okay? Everything we do online for the next month will also include daily coaching sessions with the timely topics, right? You get the live trading chat room so you can communicate with other traders, giving real-time market insights and analysis. Look, you get the instructor and coaching archives. Miss something from the daily continuing education, you can watch the recordings at your convenience. Guess what, people? Oftentimes when I'm teaching, I actually miss some of the the live sessions. Guess what I do? I work for TheoTrade. I'm an instructor at TheoTrade, and yet I access the archives and watch them at night. So, hey, it's really that cool. By the way, you can email trade ideas to TheoTrade all the time when you want to. And by the way, the start section here, whether you're an experienced trader, okay, these 22 videos, it's going to get you started right away. So don't, like I said, run away. Don't just take it for granted. Stick around because it's really cool. By the way, the address site itself, okay, I'm going to bring it down here. Okay, by the way, TheoTrade, we are proprietary. There are a lot of TheoTrade proprietary indicators. I don't want to skip Did I mention the TheoTrade proprietary indicators? So again, the actual site itself, I don't want to take up all the time here. I want to go back one slide if I may, okay, for the site itself. Kind of want to bring that back up here. www.theotrade.com/professor. That is where you need to go to online to access the bundle and all of the things provided inside the TheoTrade package. So again, I'll repeat that one more time. www, it's right here, .theotrade.com/professor. And you can go nuts. If you have any confusion at all, okay, don't be afraid to reach out to the TheoTrade platform itself. We communicate on chat online all the time, and we're monsters at responding to emails in a very quick turnaround time. On that note, I'm going to close out today's program. I want to thank you all for giving me an hour and joining me. I hope you joined TheoTrade. I think it may be one of the most pivotal decisions in your life. My name is Professor Jeff Bierman, CMT, okay, and I want to be your instructor. Have a wonderful day. Thanks for joining me, and I'll see you soon.